The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, gold prices have climbed to start the new year, hovering near fresh record peaks as safe haven demand was boosted by increasing uncertainty over a U.S. economic slowdown and trade tariffs. But it has seen some retreat in the last couple of days. So with the recent pullback in gold prices, are we likely to see more sideways action or more volatility for gold prices? I mean, what are the drivers of gold and what are the key trends to watch in this space? Well, to find out more, joining me now is Robin Tsui, who is the APAC Gold Strategist at State Street Global Advisors. Robin, welcome to the show.
Thank you. Good afternoon.
Thank you so much for joining us. Robin, gold prices started on a positive note to start the new year. Are we seeing some retreat at the moment? I mean, what's triggering the current gold price movement?
Yes, you're right. I think gold price had a decent run in 2024 and has kept up its momentum this year. Gold price is up as of today about 11%. We did see some retreat last week, but in the last, couple of days, we have seen rebounded back above 2,900. I think the tariff situation is getting more serious. The U.S. confirms putting more tariffs on Mexico, Canada, and also increase the tariffs on China. And China just hit back today on the U.S. as well. So it's going to be a lot of uncertainty, and uncertainty is good for gold historically because investors want some gold to hedge against the economic uncertainty they expect to foresee in the future.
Right. As you mentioned, the tariffs on China, Canada, and Mexico, they come into effect today. And China and Canada, they have retaliated to those tariffs. So with the recent pullback in gold prices, are we likely to see more sideways action or more volatility for gold prices, given the current economic conditions?
I think so. I think from our perspective, I think gold price will hit 3,000 US per ounce sometime, probably in the next couple of weeks, because if you look at the momentum right now, it's heading towards that figure. And obviously we have the US jobs data this week as well. So if that disappoints the market, potentially gold price could hit above 3,000 US per ounce. So going forward, we probably will see some volatility, but all in all, we are quite bullish on the momentum. We are seeing such a strong demand into gold, either from central banks, from the clients we speak to, ranging from asset owners, institutional clients, and also the private banks. So we do see quite a strong momentum heading into March for the gold market.
I see. Well, like you mentioned, a lot of analysts, they're sounding the same tune. I mean, they're speculating that gold prices could reach past that key $3,000 level in the coming weeks. Will it be able to sustain that level, though?
I think it can, just because I don't see that's a potential slowdown in the gold demand. So if you're looking at the retail demand, the institutional demand, and also the central bank's demand, it hasn't really stopped despite the fact that gold price had hit record highs. So we are seeing a lot of inquiries still coming into us asking for where gold price is heading. I think fundamentally, investors right now, they want some exposure to gold because of this uncertainty on the tariffs. And then with Trump policy, it's going to create a lot of uncertainty into the market, including equities and bonds. While gold price has hit record highs, but we have been seeing a lot of interest in the gold as well. So we do expect the gold price momentum to continue into March and the next couple of months.
I see. Well, the price of gold has continued to build on last year's stellar performance, as you mentioned earlier in our conversation. I mean, it's clocked up 9 back-to-back weekly advances to score 14 new record highs so far this year. Could gold even reach higher highs then? I mean, what's the outlook like for gold prices this year?
Yes. So in our bull case, we do expect gold price to hit 3,100 US per ounce. Clearly, it's performed beyond our expectation in the last couple of weeks because of the tariffs that Trump had put in place. But I think the 3,100 can be achieved because if we look at the Fed or other central banks around the world, they're going to cut rates. Cutting rates is actually quite beneficial for gold prices historically. And then investors are piling into gold at the moment because of the uncertainty and also the expected inflation is going to hit maybe in the US and other countries as well. Historically, commodities, including gold, it's good for inflation. So that's why I think with all these tariffs, uncertainty, geopolitical tensions around the world, it's going to benefit gold as an asset class because gold is not controlled by any government. and it's a very independent asset. So it doesn't really correlate with other traditional asset classes. And that's why we're seeing this uptick in gold demand in the last couple of weeks from all these investors we're talking to.
I see. Well, on that note, do you think Trump will be the main driver of gold prices this year? I mean, what should investors take note of when it comes to Trump and gold prices?
Well, I think the Trump policy, it's one of the factors because it's going to impact the global economy. So the global economy slow down, it's going to be beneficial for gold prices. And if the tariff's going to hit more inflation, increase inflation, obviously that's going to be quite beneficial for gold. But fundamentally, we're going to look at how the Fed's going to behave as well, because the Fed, we know that they're going to cut rates twice this year, potentially more than twice if the US slows down from the tariffs. Usually, a rate cutting cycle historically is beneficial for gold prices. So I think, yes, it's very important to look at the Trump policies, but we have to pay a lot of attention to the Fed's monetary policy as well, how they're going to behave in terms of rate cuts and also how they're going to monitor the rate cutting cycle in the next couple of years.
I see. Well, now gold demand has also hit new records in 2024 with central banks continuing to hoover up gold at an eye-watering pace. Their buying exceeded 1,000 tons for the third year in a row, accelerating sharply in the Q4 to 333 tons. Do you see central banks purchasing more gold this year as well?
We do. Obviously, the last 3 years, they hit 1,000 tons, and that's actually more than twice as the amount they bought in the last 13 years. So the amount of gold central banks buying is actually quite substantial because they already represent close to about 29% of the global demand, which means that they are, sucking up all the total supply from the mines and also recycled gold. Well, why we believe central banks will continue to buy? Because one, based on our conversation with central banks in APAC, we do see that the need for them to diversify. I guess some of the emerging market central banks, including Turkey, China, India, historically, they do lack gold exposure. And what you've seen in the past year is that they have been increasing their gold exposure because they obviously, China, for example, they only have 5% of gold exposure compared to the average held by central bank is about 20%. So that's why you've seen China has been quite aggressive increasing exposure because they need to diversify and increase the exposure to gold.
Well, do you expect any purchase patterns from central banks to, change or shift this year?
We do expect they'll continue to be net buyers, but the 1,000 tons is going to be the key milestone again. But we're looking at the risks around the world, looking at the conflicts around the world. We do believe that emerging market central banks will continue to buy. So we feel quite confident that central banks in 2025 will continue to net buyers, but hopefully it'll be close to 1,000 tons because the 1,000 tons is definitely a very strong or high key milestone for central banks to achieve this year.
I see. Well, how does more demand for gold from central banks kind of influence the way gold prices move here then? Does it have a real big impact?
So central banks' demand on a daily basis doesn't have an impact on gold prices, but from a fundamental perspective, we have to look at demand. Central banks consumes about 29% of global supply already. So from a demand supply perspective, it's quite important to sustain the gold rally because if we look back in the past few years, interest rates were 5% in the US, but that didn't really impact gold prices. And the number one reason why it's been happening is because central banks has been such a strong buyer of gold in the last few years. So fundamentally, central banks, yes, is very important. And that's why if we expect central banks to continue to buy, we feel quite confident that the gold rally will continue because there's just not enough supply to supply the central banks, and also we have the investment sector, the jewelry sector, and the technology sector to fulfill as well.
I see. Well, Robin, let's also take a look at the opportunities to buy gold. Do you think gold is overvalued right now, or can investors still see benefits from investing in gold right now?
We don't think, it's relative to other asset classes. If you look at the equity market, it's quite expensive as well. So we do advise clients if they hold a typical 60-40 portfolio, 60% into equities, 40% into bonds, it makes sense to have a long-term allocation to gold. And based on our research, having 5 to 10% allocation can actually protect your portfolio. you can actually improve the risk-adjusted return of your portfolio. So if retail investors do think gold price is high, you can always buy gold through other vehicles like gold-backed ETFs. Gold-backed ETFs can actually minimize the allocation, so you can buy a gold-backed ETF with 0.1 ounce of gold. So you don't need to buy the full ounce of gold to get that exposure.
Right.
And with the gold-backed ETF, it tracks the gold price anyway. So it can actually minimize your investment costs, but at the same time, you can track the gold price one-to-one. So I will advise investors to look at other means, including gold-backed ETFs.
I see. So how should investors of gold also mitigate the, volatility we may see, more volatility we may see in prices at the moment?
So gold investors, I think they should be quite happy with the performance in the last few years. And I think for those new investors, I think obviously it's hard to time the market to buy gold, but given the risks we're expected to see and the inflation, the currency depreciations, and all those potential impact to the equity market, we do advise investors to use gold to navigate the current volatility. So if you think gold price is expensive, as I mentioned before, you can use other means like gold-backed ETFs as a way to minimize your investment costs to track the gold price.
I see. And before we let you go here, Robin, anything else you'll be watching out for that could move gold prices in the coming weeks?
Yes, I think the 3,000 level, it's a very important ceiling, but we do believe probably in the next couple of weeks, it can break above that 3,000. One of the key indicator or data that we expect to observe is the jobs data this week. The US job data will be quite crucial to determine the Fed's path of rate cuts. And also next week, the CPI in the US will be out as well. So if it's in line with expectation, we probably expect the Fed will start cutting maybe in June. And with the rate cutting cycle to continue in the next couple of months, that will continue to provide very strong support to gold price, we believe.
I see. Well, thank you so much, Robin, for your time and your insights today.
Thank you very much.
Thank you. That was Robin Tsui, who is the APAC Gold Strategist at the State Street Global Advisors. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.